Welcome back, everyone. Today's video, after far too much delay, is going to be a look at what would happen if the price of uranium doesn't go up and how that type of scenario is most likely to play out if the 25 or so, whatever dollar spot price was actually the price and were going to continue. And I believe that this is how the longer it plays out, this is the beginning of the most bullish timeline. Okay, so what I'm going to try and do is have a bit of well, a realistic look at what would happen because we are here in late July of 2019. We're almost August, in a few days, and the spot price is in the 25 to 26 range for uranium, that is. Now, I'm going to have a look at what type of drawdowns and what things would be looking like if the price of uranium either stays here or goes lower, and what will that require, what will that cause, and just going through how that happens and what that would create. And just for purposes of assumptions, I use my research and I look at available data when I talk about what I'm seeing. Could obviously be incorrect. It's not no guarantees that all of my research and my numbers are right. You should look at this for yourself and plug in your numbers and see what they lead you to, obviously. So let's get to it. But before I do, I just want to mention that this is not forecasting fundamentals like shutdowns or growth or whatever, or any event happening in whatever part of the world. This is just price and supply response. Again, and we're assuming, I'm not assuming any crazy currency change from today's currency. Obviously, that type of crazy event could shift things dramatically, but that's why I said I will say there's dozens, if not hundreds, of possible things that can happen, but it's a bit ridiculous to talk about them all because they're on both sides. A lot of crazy good things, crazy bad things, a lot of things. But I'm just trying to stick to most likely scenarios here. So let's go with that. Okay, so where do we stand right now? The deficit um, is in excess of 10% of the global demand. The prices are at a point where they're low enough to give Kazatomprom a cash flow and let's call it profit. And so yeah, there's one profitable company out there, but it the prices are low enough so that they're not incentivizing um, anyone else to go into production. One could argue maybe two more can break even to lose money and dilute their assets if they wanted to, but not really incentivizing at these prices anyone to go into production. Um, yeah, so there's maybe half a dozen players, companies, let's call them, spending money on exploring, and realistically, those are with the belief that the price will eventually go up because even in the Athabasca Basin, I don't think too many people would be exploring if they thought the price would stay at $25 forever. But that's how the market works. So yeah, and there are a few, but there are very few significant projects to down out in the pipeline. They have a long lead time. Again, remember, 8+ years for uranium to go from discovery to production. So that's worth considering. And as for China, the main engine behind proposed growth, well, they have enough uranium to handle near-term growth. If they want to continue longer term, they'll need more uranium, but for the time being, for the next few years, they're fine. Um, yeah, and the only other thing of where we stand right now is Western utilities. that being Europe and the United States and Canada, I guess you could throw it in with that, have 2+ years of inventory. So you'll have to go from case to case, place to place, to look around to see exactly what, but they have just over, let's call it just over 2 years of inventory. That being said, note 2 years is pretty standard for inventory. Okay, so most of you probably understand this or get this, but just quickly to explain a key concept here is the process will be started by price. Now, this isn't really a spot price and more of a long-term price, but once the price hits the point where it's high enough and can be contracted out, the production can have the production contracted out, that is when the supply begins to react. So as long as it stays low, nothing's happening. But once it gets high enough, then you probably still are in the deficit for at least a year for the projects to come up back online, longer for most new ones. So this concept's really important to keep in mind. So with that in mind, if we look out to mid-2020, so less than a year from now, and we see the effective uranium price is still $25. What does that mean? Well, it means nothing is being done to start the process of getting more supply back online. It means you probably don't have any more supply. You might have less supply. You might have more come out of the market. We won't assume any big shutdowns, but that aren't already noticed. But so if you look at what that would logically mean, it would mean Cameco either sourced some from the spot market, draining the spot market, or the utility sourced from the spot market, again, draining the spot market, whatever, more is being consumed than produced. So someone, somewhere is losing inventory. So for logical reasons, just simplicity and logic, really, we're going to look as though it comes out of the utilities inventories. Because they have certain amounts contracted, if the EIA estimates for US utilities, that is, that at the end of 2018, they had 111 million, 615,000 pounds of uranium, which is, well, they use 50 million a year approximately, so 2 and a bit years. But if you were to look at how much is contracted for 2019, this year, it looks like the maximum of 40.5 million pounds, meaning it looks like there's going to be another drawdown of about 10 million pounds, unless they can find some material from the spot market and get it delivered. Can they do that? Well, you'll have to ask Cameco how much they can find in the spot market because they're looking. But anyway, my point is merely that at the end of 2019, it looks like there's probably going to be around 100 million pounds in the US utilities control or inventory, which is 2 years at the end of this year. So mid 2020, we're looking lower than that. And again, 2-year fuel cycle should really see to that. But if you're bullish and you're probably thinking that 2 years is the bare minimum, so we have to go now, I suggest looking back at the data because in the early to mid 2000s, there was significantly less than 100 million pounds in the inventories of the US utilities. And that is possible, and at this point, looking like we're likely to get there. So just be cognizant of that. So again, what happens 12 months out? Well, in the next 12 months, we are going to see, by all indications, Cominac, a mine in Niger, close and that's 3 million more pounds out of the market. There would be no work towards starting MacArthur River, 18 million pounds there, no progress. This would mean that Cameco has been able to find 10 to 15 million pounds in the spot market at these prices. So someone's really wanting to get rid of uranium at $25 a pound. And it would also mean that Cameco decides they want to continue breaking even or losing money at Cigar Lake while it depletes. Yeah, we're not going to assume any shutdown because at this point they're contracted in, so they're okay. We're going to say, based on recent, how things have gone recently, that in this year going forward, Kazatomprom continues to basically high grade mine the most rich parts of their deposit because that costs less money. And it looks like that's what they've been doing, but maybe their deposits are just really, really, really good. So maybe that's not what they're doing. And maybe they just have managed to exceed all expectations and just spend less money than they anticipated, and things are going great. That's possible. But 12 months out, deficit still remains as wide as it is now, if not bigger. Reactors are being built, and we'll see if China announces more. They've announced 6 recently, so we won't assume they announce any more. But those 6, that's another more than 3 million pounds of demand. That is 4.5 years out now. So we'll see how that goes. So what would things look like at the end of 2020 if the spot price and the effective price of uranium doesn't go up? Well, at that point, you'd have just by using uncovered demand from US utilities going forward and seeing, okay, well, on this trajectory, where would they be unless they could find some more uranium? The uncovered demand for 2020 was 20 million pounds. But let's say, I mean, at that point, they'd have to really be finding some in the spot market. Let's call it 15 million pounds, 15 million pound drawdown, which would take you to 85 million pounds, which was about the point where they really were not having fun in the mid to late mid 2000s when the price of uranium was significantly higher. But again, this would mean there would be no action towards fixing the problem. The problem that is quickly at this point getting worse. So not only has Cameco managed to continue finding more and more material in the spot market, and there's been an amazing amount, well, it's possible that there's that much liquidity. There's probably the uranium, there is the uranium somewhere, but we'll see how much it belongs to whom and whom is willing to sell. We'll see. But if there is that much mobile inventory in the spot market, it means Cameco's continue to drain it, and this is really good for the long-term thesis. But also, in addition to that, the people that have shorted uranium over the years to deliver into the contracts, I'll call them carry traders, have also managed to find uranium and cover their positions. So the drain is even more significant than the 10 to 15, let's call it 10 a year million pounds that Cameco is in the spot market. So at this point, looking forward, the uncovered demand for utilities is 50%. 50%, and that also means that they have found some supply that will be willing to contract in the 40s or 30s. But aside from that, which again, in theory is possible if there's some desperate seller. But again, what I was going to say was more that 50%, no fix, no path towards fixing the problem, below 2 years inventory, 2-year fuel cycle, someone's at risk of not getting their uranium at this point. And this point is less than a year and a half from today. It's a year and 4 months. Meaning, if in 16 months the price is still $25, and even if the day after it was $100 or whatever it would take to get all the supply back as quickly as possible, well, that would mean there's still a huge supply deficit. We lose Ranger, Australian mine, more than 4 million pounds a year, depending on the year, fluctuates. Cameco, if Cameco is able to ramp up MacArthur in 9 months, which they claim, but we'll see, and they start that right away, and it produces 4 million pounds that year, well, that's a wash with the loss of Ranger. Approximately, let's say Langer Heinrich comes back in 6 months and produces half a year's or like 2.5 million pounds of uranium. Everything goes as quickly as possible. There is still a deficit for a while longer. It looks like, and all of this then must go into the fuel cycle. Meanwhile, inventories continue to draw down 2 years out while they're at in some places, dangerously low level. All of this time needing to be destocked, so by the or restocked eventually. So by the end of that year, if they drain 10 million pounds, again, they probably drain more in this scenario, but say they source some fuel, well, then that's 75 million pounds. That's 1.5 years of inventory. So I don't know how likely that is, but it's possible. So what that would mean heading into 2021, it would mean we would have a virtually depleted spot market. I mean, unless you could find some sovereigns to sell you some uranium, it would mean there's at least 12, be 18 reactors now under construction. That's if no more get started from now. You'd have Kazakhstan entering or exiting what would happen to be, what would supposed to be its peak years of production. You'd have an industry with little investment for more than a decade, where it takes 8 years or more for a project to go into production, and only a handful of known projects. You have inventories at 1.5 year low with a 2-year fuel cycle, and guess what? Even with all that supply coming back online, you still have what could easily be a deficit for 2 more years while new mines come online. So, and this, even that, would include supply, would include a reliance on secondary supply for over 10% of the market, which again is a dangerous assumption to use when you're heading into a restocking session where demand might be at its peak. And again, remember, secondary supply is a function of underused enrichment capacity. So as demand accelerates there, secondary supply contracts. Again, it's not guaranteed to contract, but the same forces that would move it in one direction or the other would extend it in that direction, if that makes sense. Now, if you were looking for the potential for very high uranium prices, another year and a half of low uranium prices would be a great way to start. this would be the most likely way to most probably get the price of uranium above $100 by having dangerously low inventories and at a time where basically you get all of the permitted projects into production and there's still, if a surplus, barely a surplus, inventories are dangerously low. You need to restock inventories at a time where, again, there's not many known projects that are uh, even not fully developed. So you'd need a lot more supply, you'd need big restocking, and you'd have very little options to do so. So that is, at all of this is assuming very little growth um, in this scenario that I've spoken about. And if you look around the world, there is the potential for growth, decent amount of growth in the demand picture, and again, very little working on supplying that. So if anyone's thinking that this is an insanely bullish scenario that I concocted or anything, this isn't insanely bullish. I didn't say that Cameco would shut down Cigar Lake and cut production, or that Kazatomprom would cut production, one of their higher cost mines, or that anyone else unexpected would cut production, or that reactors would, SMRs would flood the planet with energy. Nothing like that. This is just looking at the current trajectory. I also didn't assume that any financial players would step up and buy any more, even though they have the options to, or an option to some, or could buy more uranium. So those are all other potential catalysts that I did not assume in this scenario. Now I did assume minor, that the spot market had a bunch of uranium and it is getting more and will for a while. Cameco will keep buying, utilities if they can too. But if people were looking for a scenario, and this, I heard in a podcast, Brandon Monroe, the CEO of Bannerman Resources, said that if the price doesn't start going up before, I don't mean to misquote him or quote him on this, this is just how I remember what he said, but he said if the price doesn't start moving up soon, then in a few years, investors will wake up millionaires. Well, this scenario is why I'm in agreement with his scenario, because if the price doesn't move, it will have to move quicker and more later. But to be very clear, he didn't say that uranium investors will wake up millionaires in a few years. No, he said if the price doesn't move. So now could it be irregardless, that irrespective of when the price moves? I'm not debating that. I'm just clarifying what I believe he meant when he said what he said. So um, that's this scenario. Now, also worth noting, this scenario relies on more than 30 million pounds of mobile inventory being purchased in the spot market in the next 18 months, probably more than 30 million pounds. So that's viable and deliverable resources. So nothing that can be bought from a financial player who's short the uranium. I'm talking uranium that's bought and delivered. Now, we'll have to see if the spot market has that much liquidity, that much depth. I'm doubting it, but it is possible. It is a possibility, and that is what we have to be prepared for. Now, if we wanted to take things one step further, Back in 2003, according to the EIA at least, was the record lowest inventory for U.S. Utilities at 45.64 million pounds. Now, that's less than 1 year's spare supply, and that was problematic later. But in order to get that low, we would need the price to not move for, well, the end of if at the end of 18, it's approximately 111 million pounds, end of 19, 100 million pounds, end of 20, 85, end of 21, 70. Again, we're being kind of generous here in a conservative way. And end of 22, you'd have 55 million pounds approximately. So sometime in 2023 is when you would be at the theoretical that level that we were back in 03. Now, this is assuming that a lot of material could be sourced from the spot market, and realistically, the spot market probably would cause a more quicker decline because if we that's assuming you can source from the spot. If you couldn't, and all the uranium that would be there came from current deliverable contracts, well, then it would be the end of 2018, you'd have 111 million, then let's call it 102, then 85 in, what's this, 20, and then 21, you'd have 66, and then at the end of 22, you'd have 36 million pounds. That is just taking in the contracted deliveries as of at this point. Now, to be very, very, very clear, I don't think we get that far. I don't think we get to this point of no spot price, no uranium price move for that long. There are signs, if you look around, that things are moving in the right direction. And also, remember, fuel cycle, 2 years. So if you have no uncovered demand and no inventory, or less than 2 years worth, you could be in trouble in 2 years, you're in trouble, basically. So the longer they wait, also worth remembering, I know I've mentioned this, but it's really important for understanding why things get more bullish by the day. The longer you wait, the more they have to stock up later, which means the more uranium they have to find when there's less uranium around. So I'm happy to wait for this investment thesis to get better and better. And every day it gets less uranium, less work towards more, closer to higher demand. It gets better in a number of ways. So that's that. So that was an excessive rant with a lot of repetition, I guess, for today, but I appreciate anyone who appreciates the video. Thanks for watching, and any comments, questions, concerns, telling me I'm wrong, something I missed, are always read over, and I try to respond to all the comments. So if you have something for me in the comment section, let me know. And until next time, have a great day. As always, everyone, please do your own research before making any investment decisions. This channel shall not be liable for any losses incurred from investment decisions made as a result of information obtained on this channel. Good luck with your investments. I'll catch you next time.